Today, we're going to go and revisit the UBS takeover of Credit Suisse. And that's because there was a major legal ruling yesterday in Switzerland about their AT1 bonds. And what are AT1 bonds? After the great financial crisis, we allowed a new type of bond to come out, an AT1 bond. This stands for Tier 1 bonds, okay? So what are their features? First, perpetual maturity. There's no due date. Second, their contingent convertibility. If the bank's capital falls below a regulatory threshold, AT1 bonds can be converted to equity and written off entirely, absorbing losses before senior debt holders. So think of where they are. They're the highest tier one bonds. And if the regulatory capital of a bank goes down, so you're in the great financial crisis, down it goes, they can turn these bonds into equity by just a snap of the fingers, okay? Which is obviously what happened when UBS took over Credit Suisse. Now, these bonds can skip interest, they can be written down in times of crisis, making them much more risky. These bonds rank below all other debt except for equity, putting investors at a higher risk of default. And guess what? Only institutional and high net worth individuals can buy these due to the large size of what you have to buy. And plus, obviously, you have to be pretty sophisticated to do this. Okay, so what happened when UBS and Credit Suisse came together? Well, what we know publicly is that they were taken over on a Monday, but that Friday, the Federal Reserve and whatever the European, I think it's ESM, their Federal Reserve, ordered UBS. Well, they said to the Swiss, Credit Suisse must be gone by Monday. They didn't tell them how. They just said, must be gone by Monday. We will no longer open up our banks to do business with Credit Suisse if it's in existence on Monday. So it was gone. It was done. And this is all because of the Wong thing, and they lost all that money, and nobody trusted their credit management or their risk management at all. Okay? So over the weekend, at literally gun to the head, the Swiss forced UBS to take over Credit Suisse on Monday. All right. And when they did that, they exercised the AT1 bonds for $9 billion, okay, bringing in more equity into the bank. And even with that $9 billion, Credit Suisse was gone, okay? They just didn't have the capital. And the AT1 bondholders in Asia sued, saying that it was illegal. And you have to remember something. So think about what's going on here. The question is was Credit Suisse actually bankrupt when they exercised the AT1 bonds? And it never did go to bankruptcy because of the forced takeover by UBS. Now, that's the facts on the banks. Now, take a step back and you look at the world, you look at every central bank in the world, there is no way that we could allow Credit Suisse to go bankrupt just so we can exercise the AT1 bond because of counterparty exposure. It would have brought down Credit Suisse, it would have brought down the world economy. I don't think anyone would argue with that. So these guys sue. It's been a while, but now the suit's just finished, or the first part of it just finished in Switzerland. And they ruled that the bondholder wipeout was unlawful. Okay? So you can see in the first paragraph, the wipeout of the 15.5 billion pounds, okay, this is English, this is the FT, okay, was unlawful, but stopped short of ruling whether investors should be repaid. The Swiss court ruled they had no clear legal basis for the move, The court found that the regulator's decree had been invalid, but did not rule on whether the bond should be reinstated or repaid. The FINMA's decision was controversial because AT1 bondholders were wiped out. It allowed Credit Suisse shareholders to retain some value, reversing the usual order in which investors bear losses. And this is really the key here. Remember, Credit Suisse actually was, quote unquote, taken over. They did get some cash. They did not go bankrupt. So, of course, investors are very happy and everything. And the guy in the last paragraph says, I think the Swiss government won't end up paying because its 9 billion Swiss franc guarantee only covers certain risky assets. If investors have to be compensated, it's probably be UBS that pays in the end, which, trust me, UBS cannot afford to pay this. So this is being kicked up to the Swiss Supreme Court, and they're going to rule on this. And FINMA said it acknowledges partial decision of the Federal Administration Court and now will analyze this decision. Now, in the American courts, we also sued, and it was a $370 million claim, which our courts ruled against, accepting the state's argument of sovereign immunity. The bondholders have 30 days to lodge an appeal. UBS fell 2.6% in mid-market trading in Zurich yesterday. So this is a dicey situation because almost every GSIB in the world has issued AT1 bonds, okay? And GSIBs are globally, systemically important banks, meaning that the 29 GSIBs, there was 30, it was Credit Suisse, which is gone, all right? So that means the other 29 banks we all recognize in the world as globally, systemically important banks, i.e., we're not going to let them go bankrupt because of counterparty exposure, okay? We're just not going to do it. Now, what do you do when you have that Friday to Monday where basically the central banks of the world says, we will not do any more business for Credit Suisse. There'll be no money transfers. There'll be no counterparty, nothing, okay? And you must do this by Monday morning, all right? And so the Swiss did. Now, Credit Suisse was bankrupt. They did not have enough capital. And if UBS didn't do anything on that Monday, they would have been bankrupt. But they didn't actually legally let them go bankrupt before they converted the AT1 bonds. So the court said they illegally did it. Now, before the court ruling yesterday, these bonds were selling at 12 cents on the dollar, okay? After the ruling, it's selling for 22 cents. So the only people buying these are people like Elliott Management, all these guys own the Argentina debt and stuff like that. This is their expertise, right? They take the law, by the law, point by point by point, and they don't really care about what the real world is. They're saying, hey, this was the law, and you broke the law. And yesterday, the Swiss court said, that they illegally changed the bonds from bonds to equity. Now, what do you think is going to happen? I know what I would do, okay? If I was the Swiss, I wouldn't pay it. I wouldn't make UBS pay it. I just wouldn't pay it. I don't care, all right? So what should they do? I mean, and what are the other AT1 bonds actually worth? Because only GSIBs are issuing them, okay? And if we can't rescue a GSIB before they blow up the entire world economy, either one, we get rid of the AT1 bonds, or we say, no, we can rescue this and take your money because that's what you agreed to. What do you think? I don't have any money there, but what do you think? Because this is actually a critically important question for the entire banking world. So, thank you for listening, and we'll talk to you later.